Hey everybody, Uncle Gary here. Welcome back to my channel. We have a lot to talk about today, and in addition to that, I've actually been off from making videos for a little while. I'll share with you a little bit in confidence. I actually fell off my bicycle. No, it wasn't an accident that anyone caused or anything like that. It was just an unfortunate thing. The paving was very uneven in an area I was cycling, and I was going quite slowly, and my wheel basically got pulled by the paving in one direction, and I just fell off the bike. But I fell onto my shoulder, so I lost a little bit of mobility for a while, and now I seem to be, back on track. So pleased to be back and making videos. With that said, we can go on to the actual topic for the day. And what I wanted to talk about today was what is happening in the economy and what the outlook for the future could look like moving forward. So we've all probably seen, I think we're at now 10 interest rate hikes in a row from the Federal Reserves and the Bank of Canada and so on. And needless to say, there's never been a time we've raised this fast, this hard, before. So it's caused a real shock for a lot of people, because with the interest rates going up, A, nobody knows exactly when it's going to end, and B, the impact of it is hard to adapt to if it keeps changing monthly. So if you have a home and you're getting potentially a raise at work once a year, if your home payments keep going up every month, it's hard to wait for a year to then get a raise and then have it continue to go up even after you get the raise. So it makes it hard to keep up with your payments and things like that without cutting into other areas of your budget. In addition to that, a couple of things have been happening that are going to be quite noteworthy. We've come out of these big lockdowns over the last 3 years, and there was a whole worldwide issue there. But the point was, during that time, there was a stimulus check program that was given out by the governments, and they basically printed money and handed it out, which at the time may have been very necessary, and I think it's a great it was a great thing to do. In retrospect, we can judge whether it was positive or negative, but I'll give the benefit of the doubt to the government and assume it was well intentioned. My point being, everyone had a lot of free cash at that point because they got a whole bunch of stimulus checks. The next thing that happened was student loan payments in the US were paused, so you didn't have to pay off your student debt. And as we know, student debt in the US is a very particular type of debt. It's not like other debts in that you can't declare bankruptcy or file for bankruptcy to escape that debt. Normally, if you owe a debt and you can't afford to pay it, or you're not able to pay it, you're able to file for bankruptcy, and then they basically will, you won't be able to qualify for credit. It will damage your credit worthiness for some years, maybe 5 years before you are rehabilitated. But in that time, you won't be able to get credit, but it does let you out from underneath the burden of that debt. Unfortunately, student debt has been classified as not the same. So you cannot declare bankruptcy. You cannot escape student debt in the US. No matter what you do, no matter what you say, you can declare bankruptcy, but that debt will always be able to be garnished off your wages. So whatever your salary is, someone's going to be able to take it and pay it to the government. So with that in the background, it was a situation during the lockdowns where student debt payments were paused because people weren't working as much. They were locked down, they were working from home or whatever the case was. So it was putting a burden on the economy, and they alleviated that burden by pausing student debt repayments. Now, on the 1st of September in 2023, we're going to see the unpausing of those student debt payments. So everyone who wasn't paying and keeping that money and doing all sorts of things with it and buying goods and services and what have you are now going to be paying it back and using their disposable income for that, or a portion of it, a portion of their disposable income. So the last piece that I'll mention that's pertinent at the moment is that the interest rates, when we started off with these lockdowns like 2019, 2020, the interest rates were the lowest they've probably ever been. They were so low, money was basically free, at 2%. People were locking in mortgages in the US. You can lock in a mortgage at a fixed rate for many, many years. So people were locking in 2 and 3% mortgages for 30 years. And in Canada, the mortgage structure is different. They're a little different. They differ. You can lock in for up to 5 years, but mortgages are renegotiated a maximum of every 5 years. It's very unusual to have a mortgage go beyond 5 years without being renegotiated in Canada. So whether you're fixed or variable, you're going to get renegotiated regardless of what's going to happen. You can't have a 30-year fixed. So the amortization might still be 30 years, but you can't fix the interest rate for that period of time. So what's going to happen now is when everyone's mortgages are renewing or coming up for renewal, basically they're going to be renewing at, arguably 3 times the interest rate. If you had a mortgage at 2%, you're going to be closer to 6 and 7%, which is 300% increase in your interest rate. That is substantial. So when you add those 3 points together, you're going to see people are not getting stimulus checks. There's no more free money from stimmies. They're going to be paying student debt repayments. So whoever was holding the debt wasn't getting the money. Whoever was not paying it was keeping that money. That's going to go back to the way it was. And lastly, debt itself is very much more expensive than it was before. So we're going to see a real change in people's disposable income and what happens with where that money goes, because it will change how the economy flows. If people who had a lot of disposable income in the retail space, just the consumer base, is now not going to have as much disposable income anymore. So many things I think are going to really take a turn for, a new direction, let's just say. So that's possibly what I think the point of why the interest rates were raised, is to try and stifle and decrease the demand for things, because everyone had so much free money. The demand for goods and services was pushing prices up more and more because people had the money. As they have less money to spend, so the demand for goods and services will fall. And arguably, although that's a reasonably simplistic view, that should bring down inflation. I did find it a little bit interesting. About 7 or 8 days ago, the Federal Reserve in the US said that they had always said inflation was transitory, and now that it's coming down, it started to actually show signs of decreasing. They've taken something of the credit for it and said, you see, it is coming down, it was transitory. I felt that was a little bit disingenuous, because they'd up the interest rate 10 times in a row in the most steep fashion we've ever seen in history. To then say, you see, it is transitory, seems like, well, after you've done that, yes, that probably would have caused it to come down, but that doesn't mean it was transitory. So we can have the debate of whether it was or wasn't transitory, but I don't think what they did was unrelated to what the outcome was. So I think they may have impacted that before they took the credit. So that was a fun event this week, or last week and a half. So with that, what I'm foreseeing in the markets is going to be a very different consumership pattern. I think people are going to be struggling to go on the same number of vacations or the same number of fun outings or trips or eating out. So you'll probably see in the cities that you're in, the corporate and commercial vacancy rates are still very high in cities. If businesses are struggling, now consumers are going to have less money to spend on dinners, coffees, just all of the services that we love to spend on in our lives. And more than that, anything else like cars, and the interest rate on car loans is very high. So it's much harder to buy a new car. You can't afford as much car as you used to, because most of it's going to interest payments. And lastly, we'll come to the property market. It's a really interesting time. And frankly, the property market's an interesting conundrum, because the prices may have come down a little bit, maybe 4 or 5 or even 10% at a push in Toronto, in Vancouver, and things like that, but not across the board. It's certainly not a blanket rule that they've come down. And every time we think there's going to be a pausing of the interest rates, a bunch of people rush into the market and try and buy something quickly in the hope that the interest rates come down. So my point in all of this is that I don't think the property market's going to come down. I think there's an insatiable demand for people who still want to buy property and who can't afford to buy it. And if the interest rates come down, more people will then say, I can now afford to buy a property, I'm going to go and buy one, which will keep the prices up. And if people can't afford it, then no one's going to want to sell yet, other than the people on the edge, the people who are over leveraged or beyond a point where it's comfortable for them. There might be a few sales for that, but I don't see a cooling off of the property prices unless there's an external shock or some unforeseen event. And specifically as it relates to Canada, the immigration numbers are still well in excess of the supply of houses. So with that, that's what I wanted to share this video. I think the upcoming economy will be a very different kind of economy. So I'm not fear-mongering or, hand-wringing and just, screaming that the sky is going to fall on our head. But I will say that it's worth having a little bit of a rainy day fund. This is what we've been saving for. This is why not blowing our brains out in the markets or not buying everything we can see in front of us This is why it's worth saving a little bit. And the good news is, in time, I think there will be deals, and businesses, as businesses fail, new ones will start. It's almost like, when one tree falls in the forest, it decomposes, and that fertilizes the ground for other trees. So there is a possibility, if you're looking to start something, older, stale, legacy style businesses that were not very advanced or not very technologically empowered, they will be potentially put out of business, and new businesses can start for much less money using more advanced technology, lots of AI, and we've all been watching the generative AI space. So that is going to be something of interest, but not without a change in what's coming. So that's what I wanted to share. I hope you got value from this video. Please go ahead, like and subscribe. If you've made it this far, you're clearly into this kind of thing. So I appreciate you watching. And with that, I'll catch you on the next one.